Zero interest business credit cards. The strategic importance of zero interest credit cards and personal profiles for business owners is huge. Whether you're rewiring homes, unclogging pipes, or teaching children discipline through martial arts, know that success comes down to smart decisions. You have to juggle service quality, customer relations, marketing, payroll, and equipment costs. But one often underestimated factor in long-term stability and growth is how you manage credit, both business and personal. Let's explore the critical importance of zero-interest credit cards and why your personal credit profile can either become your greatest asset or a hidden liability as a small business owner. Personal credit still matters for business owners. When you run a business, it's important to separate business finances and personal finances. But for small businesses and sole proprietors, especially in trades like plumbing and electrical work or running a martial arts studio, the line between personal and business credit often gets blurred. Most small businesses start with personal credit. Banks and lenders rarely offer lines of credit or business credit cards to new businesses without a track record. Instead, they evaluate your personal credit profile. If you're applying for a small business credit card or a lease on commercial property or an equipment loan or even a business cell phone plan, you'll likely have to personally guarantee the debt or the lease. This means lenders will pull your FICO score, assess your credit utilization, and scrutinize your payment history. If you have good or excellent credit, generally 700 or above, you'll enjoy lower interest rates, higher credit limits, more flexible repayment options, and faster approvals. If you have poor credit, you'll face higher rates, rejections, or the need to provide collateral. Personal credit equals credibility. Lenders, vendors, and even potential partners will assess your personal credit worthiness as a proxy for your trustworthiness. Think of it this way. Would you extend $10,000 in net 30 materials or services to someone with 3 charge-offs and a late payment? Your personal credit is a reputation score. It says, I keep my promises, I manage my risk well, and I honor my financial obligations. In many ways, your personal credit is your first business partner. The power of zero-interest credit cards. If you're running a small business, you've likely had a month where you had low cash flow or a customer paid late, maybe equipment needed emergency replacement, or marketing costs surged unexpectedly. That's where zero interest or zero APR credit cards become one of the most underutilized financial tools for small business. What are zero interest rate credit cards? These are typically business credit cards that offer 0% interest on purchases and or balance transfers for an introductory period. That often ranges from 12 to 21 months. No interest. If used strategically, they allow you to borrow money for free, with the key requirement being that you pay off the balance within the promotional period. This can create a number of benefits for a small business. Free financing is always great. Instead of taking out a short-term loan with a 10 or 15% interest rate, or worse, putting that on a high-interest rate credit card, you can float business expenses without paying a dime in interest. Cash flow management. You may have jobs lined up and invoices out there ready to come in, but bills are due now. A zero-interest card lets you buy materials or pay contractors, book advertising campaigns, lease event space, or handle repairs or inventory needs without sacrificing operational cash. They can also be an emergency buffer. Every business experiences a financial hiccup. The zero interest rate card gives you peace of mind when a job goes wrong, equipment fails, or revenue dips. Let's imagine a real-life scenario. Meet Joe the Electrician. Joe owns a residential electrical service in a mid-sized town. He's good at what he does, and he gets most of his work through word of mouth. He just hired his second apprentice. He wants to expand by adding a second van and boosting his local advertising. But here's the problem. He has a $4,000 outstanding personal credit card debt from past material purchases that he used his personal credit for. His bank won't give him a line of credit until he shows higher monthly revenue. And he's worried about cash flow since some customers delay payments. Here's where the smart credit strategy saves the day. Step number 1, Joe checks his personal credit. He pulls his credit report and sees that he has a 710 FICO score. He has one card that has 70% utilization. It's the card with the $4,000 balance. He doesn't have any late payments. He applies for and qualifies for a zero-interest business credit card with a 15-month zero APR intro rate and a $10,000 limit. Step 2, Joe transfers the $4,000 in personal debt to his business card. He moves the high-interest debt onto the zero-interest card, which costs him a 3% fee or $120, but he instantly starts saving hundreds of dollars in interest that he's been paying on his personal card. He also reduces his usage to zero on that personal card. He sets a plan to pay $300 a month and clear the business card before the interest from the intro plan kicks in. Step 3, he funds growth. Joe now has room on his existing personal card and new breathing room on his zero-interest business credit card, which still has a balance of about $6,000 left on it. He uses $2,500 to wrap both vans with his logo. He sets up a Google Ads campaign, and he pays a designer to revamp his website. Result? Within 2 months, leads increase, revenue grows, his credit score climbs because of the lower utilization and on-time payments. His long-term outlook. With a higher personal credit score and responsible usage, Joe is on track to apply for an SBA microloan, open a business credit line, or secure commercial space. Building and maintaining a strong personal credit profile is really important. And now that we've seen how it works in practice, let's break down the basics of what lenders and card issuers want to see on your personal credit profile. Number 1 is your payment history. It makes up 35% of your credit score. Never miss a payment. Not for a cell phone, utility, or credit card. 1 30-day late can drop your personal score by 100 points. Automate your bills when possible. 2, credit utilization. It makes up 30% of your credit score. Keep revolving balances under 30% of your total credit limits. Under 5% is ideal. 3 is your length of credit history. That's 15% of your score. Don't close old cards even if unused. If they are unused, start using them for small purchases once a month or once a quarter. A good idea is to put small reoccurring charges such as a subscription on a card you're not using. The longer your history, the better your score. Number 4 is your credit mix. A blend of installment loans such as auto, personal, and mortgages, as well as a credit card, helps. New credit, that's 10% of your score. Avoid opening too many accounts in a short period. Limit the number of hard inquiries. Mistakes to avoid. Don't carry balances after the zero interest period. The zero interest card turns into a 20% plus interest monster if not paid off in time. 2. Avoid using personal credit for all business expenses forever. Transition to business credit for business expenses. As you grow, establish a business credit profile through your EIN, BINs, and business cards, and slowly transition. 3. Don't ignore your credit reports. Pull them at least once a year and look at all 3 of them and dispute any errors that you find promptly. Use credit as a strategic asset. You don't have to be a financial expert to run a successful small business, but you must treat credit as a strategic asset, not just a borrowing tool. It's not just about having a card or getting a loan. It's about structuring your finances to fuel growth, reduce stress, and seize opportunity. Whether you're in a service-based trade or education-based business like martial arts, having access to cheap temporary capital allows you to bridge seasonal gaps, buy in bulk for discounts, expand without high-interest loans, take advantage of marketing opportunities, and weather emergencies without losing momentum. Your personal credit score opens that door. A zero-interest credit card helps you to walk through that door. A final thought. In business, leverage matters, and credit is one of the most powerful forms of leverage available to the small business owners. Don't ignore it. Master it. Use your personal credit as a launch pad, and let zero-interest business cards be your safety net, growth engine, and financial tool all rolled into one. Because whether you're wiring homes, fixing leaks, or teaching roundhouse kicks, you're not just building a business, you're building a future. Smart credit management makes sure that the future is financially secure.